Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HNI CORP quarterly report. HNI Corporation offers a diverse range of products and services across two primary segments: workplace furnishings and residential building products. Workplace furnishings: panel-based and freestanding furniture systems, seating, storage, benching, tables, and architectural products, ancillary and hospitality products, social collaborative items under various brands, residential building products. Prefabricated fireplaces, gas, wood, electric, and pellet-fueled, fireplace inserts, hearth stoves, facings, outdoor fire pits, and fire tables, accessories for home use under multiple brand names. HNI Corp stock price drop. A year of decline in the past year, HNI Corp stock price has plummeted by over 24%. Primarily due to a significant acquisition and subsequent market concerns. The company's decision to acquire Steelcase Inc. in August 2025 for $2.2 billion sparked investor worries about potential earnings dilution and debt financing. This announcement led to an immediate 25% drop in stock value, followed by a 9-day loss streak that further eroded investor confidence. The acquisition news marked the beginning of a sustained downward trend, with HNI stock hitting a 52-week low of $39.24 in early November 2025. The decline was exacerbated by concerns over debt financing and potential earnings dilution, leading to a year-to-date return of -17.2%. As a result, investors have been cautious about the company's future prospects, contributing to its stock price drop. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth. The main contributors to revenue growth are the workplace furnishings segment's 2.3% year-over-year net sales increase, the pending Steelcase acquisition, a 3.5% price realization in consolidated net sales, and higher volume in both the workplace furnishings and residential building products segments. Revenue decline. On the other hand, revenue decline is driven by a 0.1% year-over-year net sales decrease in the residential building products segment, the divestiture of HNI India, resulting in a $5.6 million year-over-year decrease in net sales, and decreased net sales in new construction. Overall, these factors indicate that revenue growth is being driven by strategic acquisitions and price realization, while revenue decline is primarily due to divestitures and decreased demand in certain segments. Net income and profit margins experienced fluctuations in the given period, influenced by various factors. In the 3 months ended, net income decreased by 13% to $41.2 million, while operating income margin dropped from 10.2% to 9.4%. However, in the 9 months ended, net income increased by 2.18% to $103.4 million. The decrease in net income and profit margins was attributed to several reasons, including an increase in stock-based compensation expense due to changes in fair value of awards and estimated forfeiture rates. Additionally, restructuring, impairment, and loss on divestiture charges, as well as one-time costs associated with the pending acquisition of Steelcase, negatively impacted profitability. In contrast, the 9 months ended saw a 6.3% increase in net income to $138.3 million, accompanied by an operating income margin increase from 6.9% to 7.1%. This improvement was likely due to cost savings and efficiency gains resulting from restructuring efforts. The company's financial performance indicates a consistent generation of positive operating cash flow. Despite a temporary decrease in operating cash flow from 2024 to 2025, as shown on page 14, subsequent reports reveal an increase in net cash flows from operating activities for both years, pages 28 and 56. These results collectively demonstrate that the company is generating sufficient operating cash flow to support its operations. The company's debt level and interest expenses have undergone significant changes. While short-term and long-term debts have decreased in some instances, such as from $1,142.8 million to $1,123.9 million for short-term debt, and from $2,400 million to $2,350 million for long-term debt. Other pages indicate an increase due to new financing arrangements and debt commitments. Interest expenses have also been inconsistent, with a decrease from $22.1 million to $18.9 million in one instance, but conflicting information on other pages. Management is outlining a strategic plan to drive growth and expansion. Key initiatives include reducing debt, retiring commitments, and investing in technology and digital capabilities. The company also plans to acquire Steelcase Inc. for $2.1 billion to enhance its capabilities and support long-term growth. Management remains optimistic about the future prospects of both the workplace furnishings and residential building products markets. HNI's acquisitions and divestitures overview. HNI has made significant moves in its business strategy through acquisitions and divestitures. Notably, the company is in the process of acquiring Steelcase Inc., a transaction valued at approximately $2.1 billion. Additionally, HNI has entered into a pending transaction with Steelcase, further solidifying their partnership. On the other hand, HNI has also made moves to divest certain assets. The company sold its Indian subsidiary, HNI India, in 2025, marking a significant shift in their global operations. This strategic decision allows HNI to focus on core business areas and optimize resources. The company has demonstrated a commitment to returning value to its shareholders through two key initiatives. Firstly, it has paid dividends to common shareholders, with each share receiving $1.01 in cash dividend payments in 2025. Secondly, the company has engaged in share buybacks, utilizing $83.6 million to repurchase shares that year. These actions reflect a focus on rewarding investors and enhancing shareholder value. Concerns about inventory buildup or supply chain disruption are evident in the company's financial summary. The use of the LIFO method has led to a significant increase in inventory valuation from 91% to 96%. Additionally, workplace furnishings inventory levels have increased by $2.8 million despite a decrease in inventory allowances. Furthermore, capital expenditures for workplace furnishings have risen by 50%, indicating potential overstocking and supply chain strain. The company's concerns about inventory challenges and supply chain disruptions are also reflected in the mention of global supply chain disruptions, inflation, rising interest rates, and labor shortages on page 60. These factors collectively suggest that the company is facing significant risks related to inventory buildup and supply chain disruption. That concludes the financial summary for HNI CORP. Feel free to comment below, and I will be happy to answer them when possible.